Good morning, everyone, and welcome to the pre-market analysis and trade plan setup for Tuesday, March the 18th, 2014. For those that are visiting us for the first time or watching this video on YouTube, we are Quantum Leap. We are a self-organized learning environment. We have a private Skype room that has been around for over 4 years, and each morning we come together and do our homework, look at the levels, look at the structure of the market, pick where we feel the trades are, and where our targets are. If you're interested in finding more out about Quantum Leap, my name is Doug McKay. I am the founder and head moderator, and you can reach me through email at d.mckay@stealthtrader.com. Of course, my Twitter handle is @crazy2, spelled with a K, and TOO, aka Quantum Leap. But if you are watching this on video, we go through a normal routine each morning that starts with the macro to the micro view. We look at key numbers, then we look at the trends from the macro down to the micro, and then we get into some more in-depth chart analysis. You might want to skip ahead, but we don't skip it because this is what we do to prepare to trade each morning. But before anything happens, we always got to get this legal stuff out of the way, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures, any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan and do your own due diligence. Okay, so let's take a look at it. Basically, yesterday the move was in the morning. We had that beautiful breakout trade. We broke out of the 43.50. I stayed on after the homework was done, and to call the trade. We called the trade at 44.50. I said, get in, get scaled before we get to 45.75 or 46.25, and then let one run because we likely run up to 53 area and test that CLVN from below with the possibility of continuation. And again, there wasn't much guidance above us. There was that 59 above us, but there wasn't really much guidance above that up until you got up into that 64 level. But basically, they got up into this 53 level, and we found the buyers stepping in there. And I did say that if you weren't long, you could try to get the short, but to make sure that you get in and get scaled by 51. And those were the only two trades all day. And basically, we went sideways after that and found price acceptance in around this 50.75. And most of the night, our VPOC was here at 1850 area as well. But now we're trading above the prior day range up here at 57.50. But before we get into all that, let's go through a routine and take a look at the macro to the micro in terms of the numbers. So let me bring up the homework sheet. So we're back up above the 1837.75 and holding the year. And again, these numbers, the macro numbers, are still going to be on the old contract where they put them in on, because I'm watching this area right here at 1887.50 as an equalization of the two contracts. And I'm still thinking we're going to get this blow off top. I told everybody last week I didn't think that that weakness was going to be long term. I thought if we held above that key level below us in around that 1840 level, that we would move back up and test these highs again. It's still my belief. There's a couple reasons why, and we'll go through it. Our month low is the 1823.50 that was put into the Globex last night. Not last night, sorry, the night before. So there's not much else to look at in terms of the macro numbers. Let's go take a look at what transpired yesterday. We opened in the Globex on Sunday night at 1832.25. We know how big that number was. We went back down there a couple times to pick up buyers, and we did again on the open on Sunday. Our Globex high was 45.75. That was basically our target. First target above that break of 43. 50 area. Our Globex low, 2350, is our month low, and then we open the RTH just inside of range, right on top of the value area, and more importantly, right on near the value area high for the microcomposite of this balance area that we were in, and we'll talk about that in a few minutes. We had an open test drive. We tested to both sides, and then we saw a rare occurrence yesterday where we had a 3% day. 3% meaning that we had no break of the IB to the high or the low. We stayed inside of the IB, and that's only a 3% occurrence going back over a few years. I think it's 1,400 plus occurrences. I think I saw somebody post yesterday. Our opening swing high was the 46.25, which was the range high from yesterday, or from Friday, I should say. And then our opening swing low was 42.75 for a 3.5 point opening swing. Our initial balance high, 55.75. Initial balance low, 42.75. Of course, that turned out to be our high of the day at 55.75. 13-point, again, we're getting these larger initial balances. We had our first, solid up day. We're starting to trend down on the intraday numbers, and now all our intraday numbers we're higher with the VPOC shifting back up to 1850.75, and then overnight we shifted to this 57. So you want to take a good look at the structure of the March the 12th profile, because you could use that to template for today and look at some of the levels that they tested for that day, considering that we've accepted the 57 area as our VPOC overnight. Nothing else really jumps out at me. Of course, we had a big range again. We had the 33.25 for the full session on the 13th, and we had 32.25 yesterday. And then the ATR targets the ATR ranges are expanding a bit. 15.45 for the 20-day RTH, just under 19 for the full session, and just under 10.5 for the Globex. So starting to expand out again. Again, something to watch for when when you get a blow off top. You can see that the range, the ATR ranges will expand going into it. And then our value area was higher at 53.25 for the value area high, and 49.25 for the value area low. And again, a little bit slightly higher volume than normal. Let's go take a look at the daily report. Of course, our full session high so far in the Globex is 1859.50, and our full session low in the Globex 1845.50. That gives us the 20-day ATR target up at 1864.23. I actually, love this, because this is right on our extended target from yesterday, which is the microcomposite VPOC from that balance above. So that's great confluence right there. And then the low is right there at that 1840, 1841, where we found buyers, and we'll show that on the composite chart when we get there. Taking a look at news today, we've got building permits and Canadian manufacturing and core CPI. That happened at 7:30, 8:30 Eastern. I don't know if we got how big of a reaction we got off of that, because I was already in here. And then we've got Bank of Canada, our governor speaking at 10:55. So that could be a catalyst, but I don't think it's going to be anything major with the Fed coming up tomorrow. But it could give you a clue on what the Fed might do tomorrow. And again, the big thing with Fed tomorrow is, do we get them talking more about tapering, or telling us that they're not going to do any more tapering. Just keep your eye on the COT report. Again, you've got large spec and commercials net negative, and you've got the small specs net positive and chasing this high. Let's go over and take a look at the macro to the micro on the. I did want to point this out. We do have a possible flagpole formation with a measured move up to 1869.75. So I don't like the shape of the flag, but it's something to, it's not asymmetrical. I prefer my flags to be asymmetrical, but it's something to keep an eye on with a target above at 1869.75. Let's take a look at the, the macro to the micro. Of course, the monthly, the trend is very much intact. We came down and tested this trend line and the 9 EMA, but bounced off of it, and here we are trading up at the upper distribution of last month, and we do have good slope and separation on the 9 EMA and the 20 SMA. Going over to the weekly, same thing. We came down and tried to break below the 9, bounced right back off of it so far this week, and we had lost a little bit of slope, but we're starting to get it again. Possible head and shoulders pattern could set up. I mean, it's very early in the pattern, but keep an eye on it as it's developing. But overall, the trend on the weekly is very much intact. On the daily, we had broken down on Thursday and Friday and closed below the 9 and the 20. Of course, we've now come up and tested the 9 and the 20 from below, and we're currently trading just above it. And we are at an MA hug, and that, as I talked about yesterday, is typically a decision point. We just don't know which way it's going to go. But in terms of trend, the overall trend on the daily has been halted to the downside, and now we are going sideways and consolidating. Going over to the geometric chart, we talked about coming up and testing this center line of the intermediate fork, this fork right here. And that was a possible target to the upside yesterday. We hit it right to basically to the tick, and currently we're trying to break above it. We're back inside the longer term fork. This fork right here, that's the lower line of the longer term fork that we've been following for many months, and we're back inside now. The key is if we can get above the center line, then I'd be looking for a retest and validation of this opposing downward fork right here. And that move today would take us up into that 1879 area. Whether we do it or not is going to be very much dependent on if we can get above this the center line of this intermediate fork. Of course, if we come down and test the lower line of the longer term fork, that will take us down into the 1841, 1842 area, and that would test the upper line of this intermediate fork. And if we don't come down and test this, I'm likely to take this fork off in the next day or so, because I think it becomes mute. Still have this energy point down here, but it's not scheduled to hit until next week sometime. So I'm looking at this as a possible push higher. I think they're going to go for that balance area. I think they are going to try to equalize the two contracts out, and only time will tell. Nobody can tell you what's going to happen. We can just look at what the possibilities are. There are some naked crosses above us. There's one at 1876.50 on the 30-minute and one on the 15-minute 1876.75. So that coincides with that move up on that flagpole measured move. Let's go take a look at the composite. So we're currently just trading just above yesterday's high at 56. We have this CLVN. It doesn't look like a CLVN, but when I expand it, you'll see that it is a CLVN right here at 55. But I think you also have to pay attention to this 54.25. So this 54.25 and 55.25, and I'm going to put the CLVN in here. I really think that's a no man's land. You want to be careful, trading between these two areas. And we've rotated back up, and you asked me, well, why haven't I added in these days now that we rotated back up into this area to see where the balance is? Well, when you do that, if you expand this out and add these days, it doesn't give you any new information. It still shows you that 1864.50 is the most accepted price within the larger balance area. So I'm leaving it here wrapped around the 4th of March through to the 12th of March. The other thing is I went and I drew it, and I drew a new profile just on these 3 days right here, and it's showing me that price acceptance is here at the 1850.75. And that makes more sense to me, but I don't even need to have this big down day. If I just bring in the 2 days profile, you can see that the price acceptance, and they've accepted value here around this 1850.75. And that, I love the fact that we got that shift up to 57 area, because it's showing they've accepted the value, left it, and moved up, and value has been accepted higher in the Globex. So I'm going to leave with these 2 days right here rather than the 3 days, just because this is a significant breakout candle, and I'd like to have them separate from my micro composites when they happen. So let's take a look at the levels we want to pay attention to. Of course, we want to pay attention to this 55.25 and 54.25 between there. Of course, our high from yesterday is 55.75. The value area high for the 2 days is 54.75. So I kind of like this area right here as a play or no play area. You want to wait. If you're going to get short, you really want to wait until you get below the 54.25. And if you're going to get long, you really want to wait until we get above the range high at 55.75. The value area low from the balance that we fell out of down with this big down day and the significant breakout day is still at 64.50. So that remains an immediate target to the upside. But you've got to look at this area now. We had that shift of the CLVN up to 62.25, and that's just above the value area low at 61.50. So the 62.25 you want to pay attention to. But if we get above that, get long, like just buy until we get up into the 64 area, because they'll be back inside of value. They're going to be close enough that the 64 is really going to become a major magnet, and they'll be looking for sellers to step in here at the 64. So they'll price discovery it up to 64. You can look at the 59 area, but just above the 59 area, you've got the value they were trying to hold just before they broke out here at this microcomposite 3-day microcomposite at microcomposite VPOC at 60.25. So the problem with getting long above 59.50 is you're going to run into this 60.25, and you could see a responsive seller step in there and hold us down. So really, if you're not getting long off of the range high from yesterday and getting inside of the value area low from the smaller microcomposite at 56.25 into that 58 area and the test of the 60.25, you want to wait until you get above this the 62.25 and then get long into the 64 with the hope that we push through to the other side of the smaller value area at 68.25, but the big target above is that 69.75, and that's why you can see that that measured move on the flagpole takes us up to that 69.75. So I really like that that measured move and the confluence it gets with the other push to the value area high at 73.50, and of course our RTH high at 77.25 with the all-time adjusted high up there at I think it's 80.50, I believe. Somebody want to look that up for me quickly, and if it's 80.50 or 80.75, but I know it's one of the two. So let's go over and take a look at our overnight and move our numbers over. Mike, can you or Howard, can you check on that adjusted high, the exact on it for me, please?
The adjusted all-time high?
So our overnight high is, is it 80.50 or 80.75? And our overnight high is 59.50. And our overnight low is 45.50. And our VPOC shifted up to that 57. All right, so here's the scenario. We've got another 25 minutes. We are either going to open up just inside of range, possibly inside of value. The value area high from yesterday is 53.50. So you really now have to look at, we were talking using this 54.25. But really, now that I see that you've got this 53.50, you really have to wait until you break below 53.50. So this whole area between this 55.75 area all the way down to this 53 is really danger zone. You really have to wait till it gets below. So I'm going to be using 53 and a quarter as my trade area, or the 55.75. And in between that, it's going to be a no play for me because it's just too dangerous. You don't know which way it's going to go. Above 55, then I'd be looking for them to make the move inside of the value area and make a move towards this 58 with the takeout of the overnight high at 59.50, which is also the CLDN right here, with the major target, the first major target above being that 60.25, where you could see some responsive sellers stepping in at 60.25. The other area that we talked about was the 62.25. This would be a trade area up here. And then that breaks us back inside of this. Let me just move this over so we can see this better. That takes us back inside of value and back above the 62.25, and our target above is still going to be yesterday's 64.50, which is the microcomposite VPOC. Come on. There we go. With the secondary target being up there at that 69.75, which is also the flagpole measured move. And the microcomposite VPOC, where they're trying to hold value before they broke down and tried to hold it down here and around that 59 area. And then the extended target is going to be our 73.50 area. And then if we get really moving, we still have these, what was it, Howard? Was it 80.25?
77.75.
No, 77.75 is our RTH high. Our adjusted all-time high was put in the Globex.
All right, I was looking at the composite chart.
All right, let's. You got to look on the Globex chart. Let me just bring it up. Come on. Let's switch it to a daily. Oh, it was 80. It was 80. 80.50. Okay, get rid of that. So our extended target is at 80.50. Okay, so that's our targets, and I'm really, if I'm not long above 62, I'm really not going to try to get into a trade in this area here. So I'll be looking to get long above 62.25 for that that rotation back up to 64.50 with the possible extension, possible extensions. I'm not expecting to get there today, but I always got to have a plan in mind. But I'm not going to try to enter a trade anywhere in this area above, because I just think the risk is too great, as sellers could step in. Below 53.25, then I'll be looking to get short into the 50.75 for the naked Depop, and a push down to the value area low and the midpoint from yesterday at 49.25, and that will be my trade area and target to the downside. I mean, the initial target is the 50.75, but I'm looking for continuation of 80%. We had a pretty tight value area, so if we get back into this value area, look for them to come down and test the value area low. And then if we get below that, then I'm looking for a move back down to the 45.50, but the one I'll be watching really is this 42 area and the range low, and that will be the other area. And below that, we've got the naked Depop at 40.50, and of course our 39 that we were saying. If we get below 39, I think we got to come all the way back down into this distribution zone right here. And I think we get stuck back down there. I'm still looking for this area of the auction to be repaired, and so my trade area below that is going to be this 39, and targets below is going to be 29.50 with 25.25. And you've got a naked close down here too at 32.25. Well, I'm sorry, we've got the 34. I missed the 34. 34.50. All right, and I'm not expecting much more than that today. I really think that the key is whether or not we can hold above this 55.75. If we hold above 55.74, I'm looking for rotational day with an upward bias up towards the 64.50, but I'm not expecting much more than that. If we can't hold above the prior day range and we get below this 53.25, then I'm expecting a rotational day with a lower bias down to test the 42 area and take out the overnight low. So that's what I'm looking at. Let's take a look at what it looks like on the Keltner. Center line is right there at the call it the range high, 55.50, 55.75. If we hold that, looking for a move to test the upper Keltner will take us up to that 60.75 and take out the overnight high and hit our first target. But if we can't hold it, a move down will take us down into that 18.50 area and take out the naked Depop and the naked close. The close yesterday was 18.51, and test the other side of balance at 49. Take a quick look at gold. I mean, gold coming back off a bit. Oh, I meant to mention something. We do have, I wanted to put those naked crosses in at 76, just so that we're aware of them now. We've got two naked crosses at 76.50 area. And then I'll just put the one in. We don't need two sitting right there. And moving over to take a quick look at gold. You can see gold has come off. This is still going to be a valid, even with the rim moving up higher, this is still a valid possible cup and handle. I don't really like them when they get the right rim higher than the left rim, but we've got to pay attention to it anyway. So let's just take a look at where the retracement for the validation and the formation of the handle is going to take us. It's going to take us down into that 13.11 area. And remember, 13.15 was our target with the breakout of the descending broadening wedge. So that's a probable area that we would probably go down to pick up buyers. Let's take a look at what it looks like on the composite. Here's my gold composite. Oh, I closed it down, so we're not going to take a look at it right now because somehow I closed it out. We don't want
The
to
top one there, Doug, it looks like.
No, that's the 15-minute.
Okay.
And it has a composite, but it's not the composite on. This is the Globex composite. I want to see the RTH. Anyway, we don't have to take a look at it. Or if, Howard, if you want to go, if you got anything for us, I can open it up while you're going through your stuff.
Yeah, I have a couple things.
Okay. Over to you.
Okay, so looking at the daily chart, on the 13th, we closed below both the 9 and 20. 14th, we had some continuation. And then yesterday, we actually have a key reversal candle. We came down and tested the 50 SMA, which is this cyan colored line. Tested it, had a very strong rejection overnight, and now and yesterday came up all the way to test both the 9 and the 20, but did not close above them. So far during our Globex session, we're making another challenge to the 9 and 20. So if we have a up day today and close above, that would reinforce this key reversal candle, which is a candle that has a lower low, a higher high, and close below the prior day's high. And this would be, consistent with the patterns we've been seeing for months and months, where we have some retracement like we had the past week and a half or so from the last all-time high, or from the current all-time high. And then we find support, and we have strong buying coming in. Just like here, after we had a retracement, we had a Mr. Sneaky, and then hardly any red candles all the way to a new high. So that bears watching here. We have our resistance levels right about where we're at, based on the daily 9 and 20 SMA, or moving averages. So that'll be a key resistance level for today. Take a quick peek at the week. So last week we came down right to the weekly 9 EMA. So far this week we had a challenge below, didn't quite get down to the 20 SMA, and now we're back above the 9. So the weekly 9 EMA is holding a support. Back here on the week of February 3rd, we had our hammer candle after a challenge of the 20 SMA, but a failed challenge, as it turns out. And we've been off to the races since with this little pullback, but this was a bearish engulfing. We'll see if this week stays positive, or whether we do turn lower and close below this 9 EMA, which would be a confirmation of this bearish engulfing. So those are the things to be looking for on the weekly and daily charts. You can take a peek at some market breadth. And with the move yesterday, we can see that all the sectors followed with the move. Utilities has been gaining some strength over the last several days, and while the rest of the sectors were heading lower, they've now started turning up with yesterday's action. So next we'll take a look at advanced decline and up volume versus down volume. take on balance volume as well. Okay, so after yesterday's price action on the NYSE, the advanced declines on a 10-day average basis did break back above the break-even level, and NASDAQ in red went right up to the break-even level of 50%. And on up volume versus down volume, both indices are pretty much right at the break-even. We can see on balance volume is also turned up a bit, so it's been tracking price pretty closely since we had this last swing low to the last swing high. And if you want to look at the gold chart, Doug, I can bring it up and you can narrate if you like.
No, I've got it already.
Okay, so I'll turn it back over to you then.
Okay, so right now we've got, we tried to hold value up here in around this 79. We talked about this 52 area and it being a key, because if we get below that, you look for your first target below, which is going to be this 34.40. But the big target down here is down here at this 13.50, because this was our target with the breakout of the descending wedge, to the upside. It's the microcomposite VPOC that we came up to test and accepted value. Once they accepted value, they accepted value here in around 13.20, and then of course the other side of this whole distribution zone. And I think once we get back inside of this distribution zone, we've got to look for a possible move down to test the 1300s again. And then if we can't hold 1300s, the first major destination is down here at 1290. Let's take a quick look at what the lower, so we can go all to come down and still have a valid cup and handle. We can come all the way down here to this 1261.30 area and still have a valid formation. Of course, you want to be careful and not take the measured move until you get back above the right. But as I was saying earlier, if we get, I still believe that if we get below this 1300, like we were talking about when we were measuring, when we were watching this cup and handle, when we were using the lower right rim, that if you got below 1300, then definitely get short, because you can get short into that 1286 area. But now you've got 1261. So you've got this area down here. You've got this. I'm sorry, it was 1283. So you got 1298, 1282, and the 1276, and all the way down into this balance area right here, which is in the 1261 to 1258 area. And I still think that would still leave it as a valid target. The one that I was watching before is still down here at 1240. Now, of course, if we go down and hit this 1240, we'll invalidate the cup and handle, but that's okay, because the pattern is not set yet, and it could just be a false pattern. So just if if you're not already, if you want to take the short from here, I would take it with the break below 52. And with the major target being down here at 34, with the possibility of coming down and testing the other side of balance at 1200. But if it does break 1200, then I think that's going to be a pretty low risk trade to the downside, and at least making sure that you get scaled before this 1290. But I think you'd see some continued weakness and a move down. So just what we're looking for gold. If we hold this 1351. I think we're going to see some chop between the 64 and 51 area, 51, 52 area. As we just chopped in this area, we've broken out of this balance right now, and we're trying to break back into this balance, but they're fighting to hold us out of that right now. The value area high for this balance area is down all the way down here at 45. I don't think this 53 is going to hold personally. I think we're going to come down further. But again, we've got Fed coming in, and anytime you've got Fed announcements, it could revalue perceived value of the participants within the marketplace, and you never know what's going to happen. Anyway, we're almost to the open. That is going to conclude the morning session. As always, trade well, trade safe, and we'll catch you on the flip side.